Hey there, Brad Casser from GridOptionTradingStrategies.com. So I just wanted to do a follow-up on PLTR and the PLTR chart we've been discussing the last couple of videos and in the Daily Tips and Insights newsletter too. But before we get started, real quick, I just added an important new perk to my Daily Option Tips and Insights newsletter. So be sure you listen to the end to find out what that is. I think a lot of you are really going to like it, and I hope I haven't bitten off more than I can chew. Okay, as a reminder, we were monitoring a descending triangle pattern on PLTR in real time as things continue to play out. So here's an intraday chart back on May 27th that illustrates the descending triangle very nicely. Again, a descending triangle is a situation where you have a stable horizontal support level, and that's where buyers keep showing up to support the stock. But you've also got a series of lower highs, meaning sellers are able to push back buyers at lower and lower levels. Obviously, both trends can't continue indefinitely. It's generally considered to be a bearish pattern, but I made the case that a better way of viewing the pattern is that it indicates that buyers and sellers are squaring off for a showdown, and that one side will likely win out decisively. And that's exactly what happened, as you can see in this intraday chart from just 2 days later on May 29th. As you can see, PLTR exploded higher and shot up above the $160 share price level over the next couple of days. Now, we were actually looking to open a new official put selling trade at the $130 strike inside the Leveraged Investing Club once the stock broke to the upside, but we were too slow, or rather the stock was too fast. We were planning on entering it on that second day on the chart, but unfortunately PLTR gapped higher and continued ripping. And that presented us with a couple of new issues, one of which, thanks to basic technical analysis, we clearly saw. The first issue was simply pricing. After the stock shot up so much and so fast, those $130 short puts a couple weeks out no longer paid an attractive enough rate, in my view, to entice us to enter the trade. But even more important, after those two big rally days, the stock now found itself at a resistance level, around that 160 level. And the last thing you want is to be selling puts when a stock is trading at resistance. That doesn't mean the stock can't push through, but that's a big ask, and there's an increased risk of a pullback if the stock can't break through. Now, check out this third intraday chart from today when I'm recording this video on June 4th, about halfway through the trading session. And it's pretty cool because it shows that resistance level and then what subsequently happened. So now the stock's been pushed back hard and is currently struggling to hold on to that $140 level. And now we have a new pattern, a trading range between support at around 130 a share and resistance around 160 a share. So are we going to jump in on those $130 short puts now that the stock has pulled back and they pay much better? No. One, I don't know how much lower the stock is going to trade. Now, I've made this case in the past. The best way to catch a falling knife is to wait for it to stop falling and then just go over and pick it up off the floor. I've actually made a video that was a really good example on a trade we did last year on Lulu, where we waited something like 11 consecutive trading sessions before the stock finally bottomed and we entered the trade, and it was one of our most successful trades last year. And I've added a link to that video in the description section. But I want to see clear signs that a stock is done moving lower before entering a put selling or covered call for income trade. And this is also very important. Just because you can identify a key support level, that's no guarantee it will hold. In a nutshell, sell puts and covered calls for income at support levels only after those support levels have proven themselves. And then exit the trades if and when they trade up to an identifiable resistance level. Disciplined trade entries and disciplined trade exits. The more you're able to do that, the better your results will be. Now, we actually had a club member who I love dearly, and I'm not calling him out, who did in fact sell a PLTR July 17th, 2026 $135 put for $3.22 a contract, or around 17% annualized, when the stock was trading around that 160-ish resistance area last week. I think it was 6 days ago. Now, with the stock trading around 140 a share, I just checked, and the bid-ask quote on those contracts are $6.35 to $6.55. Yikes. I still wouldn't enter this trade myself at this point, but that's the risk of selling puts at resistance. If he'd waited until today, again, still a terrible setup in my view, he would have doubled the amount of premium he collected. Finally, this is exactly why I don't sell options based on some arbitrary delta level. Sure, that may work if a stock is just drifting around aimlessly, but delta is useless as a probability measurement when stocks are trading at key levels, for example, support, resistance, and as we saw last week, the final showdown and resolution of a descending triangle. Okay, if you enjoyed today's video and want more, be sure you subscribe to the channel and check out the other videos and playlists. Also, sign up for my daily option trading tips and insights newsletter so you don't miss anything. Both the channel and the newsletter complement one another, as some topics are better suited in written form and some are better suited in video form. And I can often cover more in the newsletter than I can in these videos. If you want real-world insights from a professional trader who's been selling options successfully for more than 25 years, you're going to love the Daily Tips newsletter. It's all about improving your trading results. So if you struggle with finding great trade ideas, knowing when to enter them, what the best strike prices and expiration cycles are, how to optimally manage a trade once you're in it, and most importantly, what to do when a trade goes against you, the Daily Tips newsletter is a tremendous resource. And there are also other perks to signing up as well. I periodically offer what I call secret seminars, or a more in-depth article or video series on an option selling topic that we really drill down on. And these are only available to Daily Tips readers. I also now occasionally share official Leverage Investing Club trades in real time with non-club members via the Daily Tips newsletter. I call these open house trades, and there's a link to a full 12-page PDF case study in the description section that covers the first one of these trades I shared with Daily Tips readers in real time for you to check out. It was a successful 65-day trade on T. Rowe Price, one of my favorite under-the-radar option selling stocks that gave us a really nice 20.05% annualized ROI over the holding period. And this is also new and what I alluded to at the beginning of today's video. Again, I hope I'm not biting off more than I can chew here. But if you find yourself in any kind of underwater or broken option selling trade, either a put selling trade or a covered call trade, if you're a Daily Tips subscriber, feel free to reach out to me. You can simply reply to any issue of the newsletter and I can take a look at your trade and give you some insights and ideas on what I see are some of your best choices. You can sign up for the newsletter directly via the pinned comment below, or there's also a link in the description to the ever-growing option trading downloadable library page on the Great Option Trading Strategies website. Download anything from there, and you'll begin receiving the Daily Tips newsletter automatically. Okay, until next time.